Welcome to the Deep Dive, your shortcut to cutting through the noise and truly understanding what's going on, one stack of sources at a time. Today we're doing a deep dive into the latest financial results from Lodha Developers, one of India's leading real estate players. We've got their investor presentation here, the official board meeting outcome, auditor reports too, and a press release, all covering their unaudited financials for the quarter ended June 30, 2025. Our mission today: let's unpack these documents and really try to get a handle on what they mean for Lodha, obviously, but also for the broader Indian real estate market, and maybe even for your own financial literacy, especially how a giant like Lodha navigates both impressive growth and, well, some unexpected financial speed bumps. Okay, let's unpack this. So let's kick things off with the big headline. Lodha is reporting its best ever Q1 pre-sales. From your perspective, looking at all this data, what were the absolute standout figures? What really jumped out?
Well, what's really fascinating, I think, is the sheer scale of the growth, especially when you consider some challenging external factors they mention. So for Q1 of their fiscal year 26, Lodha reported pre-sales of INR 44.5 billion.
Okay.
That's a significant 10% jump year over year.
10%. And revenues?
Revenues from operations also saw a really substantial jump, up 23% to INR 34.9 billion. Big numbers.
Yeah, those are big. I also noticed their CEO, Mr. Abhishek Lodha, made a kind of a striking comment. He said this performance would have been even superior if sales hadn't been hit for 2 weeks of uncertainty due to the India-Pakistan war.
Oh.
That brief slowdown, yet they still hit record numbers.
Hmm?
What does that specific detail tell us about maybe the market or Lodha's position?
Yeah, that's a really insightful point, that 2-week pause because of, geopolitical tensions. It's powerful. It shows us, well, two things, really. First, how sensitive the market can be to external shocks, even temporary ones.
Hmm.
But maybe more importantly, it just underscores the underlying demand, almost like insatiable demand for housing in India right now. It allowed them to bounce back so quickly and still post those records. Points to real resilience.
Okay.
And if we connect this to the bigger picture financially, their adjusted EBITDA, basically operational profit before financing and taxes, grew 25% year over year.
25%.
Yeah, to INR 12.0 billion.
Oh,
And the margin stayed strong, robust at 34.4%.
okay. And net profit.
Net profit after tax, PAT, that also climbed impressively, up 42% to INR 6.8 billion, which actually expanded their pet part margin quite a bit from 16.3% last year to 18.6% this quarter.
So it's not just selling more, they're actually making more profit on each sale.
Exactly. These figures really point towards strong efficiency and pretty effective financial leverage.
Right. So those record numbers give us a great snapshot of, their immediate success. But the real story often is in the long-term vision, isn't it? And Lodha has this particularly ambitious plan laid out, their 20.20 action plan. Can you break that down for us? What does that actually involve?
Well, this plan, it really raises that important question about planning for sustainable but also pretty aggressive growth.
Yeah.
So the 20.20 plan, it targets a 20% compound annual growth rate, CAGR, in pre-sales. That's their average annual growth goal.
Okay, 20% growth year on year compounded.
Exactly. And they also aim for a 20% return on equity, ROE, by FY31. That tells you how well they're using shareholder money to generate profit.
Right.
And crucially, they want to do all this while keeping net debt under a ceiling of 0.5 times debt to equity. So controlled leverage.
And the pre-sales target itself.
It's huge. They're aiming for INR 500 billion by FY31. Just to put that in perspective, it was INR 176 billion in FY25.
Wow, okay, that's a massive jump. And it's not just residential growth they're counting on, right? They talk about diversifying into annuity income. What exactly is that? And I guess, why is it a smart move for a developer?
That's a great question. So annuity income, basically it means building recurring income streams, stuff that isn't tied just to one-off property sales. They're targeting about INR 15 billion from this by FY31. That's way up from the INR 2.5 billion in FY25.
15 billion.
Yeah.
From what kind of things?
Things like rental income from warehousing, industrial assets, also high street retail,
Oh.
and office spaces that are often sort of adjunct to their big residential projects.
Oh, yeah.
And they also have this growing property management business. They mentioned their Belvy app serving around 70,000 households already. They reckon this gives them visibility of over INR 11 billion in recurring income just from existing assets.
So it smooths out the bumps of purely selling houses.
Exactly. It creates more predictable cash flows, makes them less reliant on the cycles of residential sales, which can be, quite volatile.
Makes sense. Now, to hit that kind of huge long-term growth, they must have a specific strategy for, getting into markets, their key cities. What's their approach in places like Mumbai or Bengaluru.
They call it a supermarket strategy, which I think is actually a pretty good analogy.
Okay.
Think of it like, setting up a reliable neighborhood store every few kilometers. It's about establishing a strong presence every 2 to 4 kilometers in key markets. Mumbai metropolitan region, MMR, Pune, Bengaluru.
So density.
Density and visibility. They already have about a 10% market share in MMR, which is huge. They're number 3 in Pune. They're now in a growth phase in Bengaluru, and they're looking to pilot in the National Capital Region, NCR, within the next year or so.
And they're adding projects quickly.
Very quickly. This quarter alone, 5 new projects added. Gross development value, GDV, of INR 227 billion across those key markets. That actually means they hit over 90% of their full-year target for new project additions just in Q1.
90% in one quarter. Okay, they're moving fast. And beyond their own strategy, what about the wider market? What conditions are helping fuel this kind of ambition? Their presentation mentions sustained wage growth.
Absolutely. That's a really fundamental driver here. White-collar wage growth in India, it's been consistently above 9% for over a decade. For 2025, the expectations are somewhere between, say, 8.8% and 9.9%.
And that's higher than house price growth.
Significantly higher on average, which directly improves housing affordability. It just fuels demand.
Right.
Combine that with supply consolidating, the big branded developers like Lodha gaining share from smaller, unorganized players. They call it a once-in-a-country's-lifetime opportunity.
Strong words.
Yeah, and they back it up by projecting something like 75 to 100 million new households becoming capable of homeownership just this decade.
That's a massive demographic tailwind, as they say. Huge. Okay, let's pivot a bit and talk about the balance sheet itself. Lodha makes a point of emphasizing a strong financial profile, keeping debt under control. What's the latest picture there? How's their debt situation looking overall?
Well, they definitely aim for and generally maintain a conservative approach to leverage. Their net debt right now stands at INR 50.8 billion, which translates to a net debt to equity ratio of 0.24x.
0.24.
Yeah, which is comfortably below their own stated ceiling of 0.5x. So plenty of headroom there on the overall metric.
And the cost of that debt?
That's actually improved, too. Their average cost of debt decreased by about 40 basis points, just quarter over quarter. It's down to 8.3%.
Okay, so overall debt levels look controlled. Cost is coming down.
Yeah.
But while that overall picture looks pretty robust, it's always crucial to, dig a bit deeper than the headline numbers. Our sources here also include the auditor's report specifically on their listed, secured, non-convertible debentures, NCDs. And this report flags something specific. It warrants a closer look, doesn't it?
It does. And this is a really critical point for getting the complete financial picture, not just the summary. The independent auditor's report states quite explicitly that the company has not complied with financial covenants of the debentures.
Not complied, okay.
And specifically that the security cover available for debenture holders against the outstanding listed NCDs is not in line with debenture trust deed and related documents.
So what does that mean in practical terms? What's the issue?
Well, for the INR 6,006 million, about 6 billion rupees in these outstanding listed secured NCDs, there's a requirement for security coverage of 1.5 times the amount owed.
Right, assets backing the debt.
Exactly. And the report says they haven't met that 1.5 times coverage ratio as of June 30th, 2025.
So even though the overall debt to equity looks healthy?
Correct. On this specific slice of their secured debt, there's an area of non-compliance with the terms agreed with those debenture holders.
What are the implications of something like that?
It doesn't necessarily signal an imminent crisis, let's be clear, but it is definitely a flag for investors and those specific creditors. It's a breach of the agreement terms, and it typically requires the company to sort it out promptly with the debenture holders or the trustee, maybe provide additional security or get a waiver.
Okay, so an important nuance to the financial health story. Good context. Now let's shift from the balance sheet specifics back to their physical assets, particularly this mega project, Palava. They seem to have incredibly high hopes for its future value.
Oh, absolutely. Palava is a huge focus for them, and it really showcases their long-term, large-scale development strategy. It's positioned strategically right at the epicenter of some major infrastructure upgrades coming to the Mumbai metropolitan region.
Like the new airport.
Exactly. The Navi Mumbai International Airport, that's supposed to open around September 2025.
Oh.
Also, the Malunda-Airoli-Palava Freeway opening in FY26. And even down the line, a bullet train station expected by 2028 or 29.
So connectivity is key.
Massively. And they say this strategic location has already driven an 8x increase in land value there in just about 4 years. It reached roughly INR 210 million per acre in 2025.
Wow, 8 times.
Yeah. And looking forward, they project Palava and another area, Upper Thane, together could deliver something like US $175 billion in sales.
Billion with a B.
Billion with a B over the next 3 decades. And crucially, with around 50% EBITDA margins. Very profitable.
How do they get such high margins there?
Partly, it's due to what they call the significant housing price arbitrage. Prices in Palava are still considerably lower than in Mumbai's core suburbs, even with the rising land value. So it offers this unique value proposition to buyers, while Lodha benefits from the land appreciation and scale.
Okay, let's talk about another angle Lodha emphasizes quite a bit. Their do good, do well philosophy suggests a commitment beyond just the bottom line, right? How are they actually performing on the ESG front, environmental, social, and governance?
Well, their commitment, at least based on external recognition, seems quite notable. They've racked up some significant accolades. For instance, they were selected for the S&P Sustainability Yearbook in the top 10% for their global CSA score.
Yeah.
And they ranked 6th globally and 1st in India in the S&P CSA 2024, specifically for real estate. So that's pretty impressive validation.
6 globally is high.
Very high. It means their environmental practices, social initiatives, governance structures, they're being independently verified as top tier among global real estate peers. They also got a 5-star rating, perfect 100/100 score, in the GRESB Development Benchmark 2024. They're part of the FTSE4Good Index series, hold an MSCI ESG rating of A. These are all strong signals, especially to the investment community, about their sustainability credentials.
Right. Those are definitely impressive badges to have. But beyond the awards and the rankings, how does this do good, do well idea translate into maybe tangible business benefits for Lodha? Or is it mostly about reputation in a tough market?
I think it's increasingly both, but the tangible benefits are becoming clearer. Take the social side. Their Unati program, they say, helped 300 women get jobs in Q1 FY26 after training. That's direct social impact, but it also strengthens the local communities where they build, which can be good for business stability.
Makes sense.
And their Lodha Genius program, with Ashoka University investing in future talent, they welcomed their 3rd batch and 300 students picked from 7,000 applicants.
Wow.
Plus, retaining their spot in the top 100 Great Place to Work rankings in India, highest among real estate firms, that's absolutely crucial for attracting and keeping the best people.
Yeah, talent is key.
So yes, these things boost brand reputation, which definitely helps attract buyers and maybe ESG-focused investors, but they also likely contribute to a more stable operating environment and a stronger talent pipeline. Real benefits.
Okay. And what about the environmental part of do good, do well? What are they doing specifically on that front?
Environmentally, they manage a huge area, over 60 million square feet of green certified portfolio space. That shows a big commitment to sustainable construction and operations. They have specific initiatives like the Urjank program at Palava for benchmarking residential energy use.
Benchmarking, okay.
And critically, they state they achieved carbon neutrality for Scope 1, Scope 2, and some Scope 3 emissions for FY25.
Scope 1 and 2 is direct emissions and energy use, right? Scope 3 is trickier.
Exactly. Scope 1 is direct, Scope 2 is purchased energy, Scope 3 is the wider value chain, which is harder. So achieving neutrality there, even for select categories, is significant. They also have about 10 milliW of renewable electricity power purchase agreements, PPAs, already active across their sites, with another 15 milliW planned.
So buying clean energy.
Right, and their overall strategy lines up with a stated commitment to become a net zero carbon emissions company by 2050. It shows a long-term strategic view on environmental impact, not just token efforts.
And finally, tying it all together, how does their governance structure support all these goals? Financial, social, environmental.
They mention operating with a decentralized structure and an empowered board of directors. The stated aim of this framework is to emphasize responsible conduct through integrity, transparency, fairness, accountability. The goal, ideally, is to ensure ethical decisions, clear procedures, and proactive communication with all stakeholders. That builds trust, which underpins long-term sustainability across everything they do. Hashtag, tag, outro.
So quite a journey through Lodha developers today. We've covered a lot. We saw their record-breaking Q1 pre-sales, that really ambitious 20.20 action plan, aiming for massive growth in key Indian cities, alongside that strategic move into recurring annuity income.
Diversification.
Right. And we also looked at their pretty impressive ESG credentials, those high rankings, and the tangible side of their do good, do well philosophy.
Definitely. But importantly, we also had to highlight that specific auditor finding, the non-compliance with financial covenants for those secured NCDs. It gives a more complete, maybe more nuanced financial picture.
Crucial context, yes. So you put it all together. It's a really compelling look at a major player in a market that's just evolving so rapidly. This unique mix, aggressive, almost city-building scale growth on one hand, focused diversification, a strong stated commitment to ESG and societal impact. And yet, you couple that with this immediate financial compliance challenge on a specific debt instrument. What does this whole picture, this blend, really tell us about the evolving landscape? Not just for Lodha, but for real estate development, for corporate responsibility in a booming economy like India's. It certainly gives us, and hopefully you, a lot to consider. We definitely encourage you to keep exploring. Thanks for joining us for this deep dive.